Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for January 23rd, 2020. Today we're looking at the NZDUSD, the New Zealand dollar, versus US dollar for today's trade analysis. Two different trends here on the daily time frame. Long-term uptrend, we can see that starting all the way back in the end of September. The market started all the way down here at 0.62, and it's been rising pretty much ever since September, moving all the way up to the high point into the mid 0.67. So, a pretty significant rise. In the past couple of weeks, though, we've seen the market pulling back against that uptrend, pushing down from the 6750s or so back now into the 66 level as it pressured back down along this bearish trend line here. Past few weeks, we've been somewhat in a range or period of congestion inside this black box. Let's go ahead and zoom in a little bit more on this area. And we can see 4 days now finding support right around the 0.6600, 0.6590 area as our current support. So a couple of things here. One, we haven't broken 65.90. We've challenged it, we've tested it, but haven't broken it. So I don't think we can have full confidence yet that we're going to see the continuation of this short-term falling trend and a continuation down to the green zone 65.70, 65.55 until it gets successfully underneath 65.90. However, I don't think there's full confidence yet in reversal either. We do look at today's candle and yesterday's candle and notice that we opened lower than yesterday closed and are now currently higher than yesterday, but in somewhat of a small engulfing candle, if you will. But we really don't know what this candle will look like by the end of day today. Will it look like a bullish candle like it is, or will it be bearish back under the blue zone? So we don't know for sure that this is going to remain like this. So that's one thing we need to be aware of, is waiting for the real opportunity rather than just assuming it's going to stay like this. Because again, if this suddenly falls back under the blue zone by the end of the day, it won't look like this. It won't look like an engulfing candle that engulfs the previous daily body. So we need to be sure we have the right timing. Now, we can make some assumptions as we see some setups on smaller time frames, which is what we'll be looking for. Either a pushback above 66, 0.66 on the 4-hour time frame, or below 65.90 may give us a clue of the first move outside of this blue shaded area. Obviously, the orange zone is your next resistance near the black trend line. That's 66.20.30, and the green zone below the blue zone, 65.70.55, is your next support. Let's take it down here to the 4-hour time frame, and then once again, here we are, just kind of waffling around inside this 10 pip zone or so, the blue shaded area. I'm going to zoom out one time so we can see that a little bit better. Waffling around here, been testing underneath 65.90 for the past several hours. Unable so far to break underneath there, just kind of challenging underneath it. It's been a little bit above 66 as well, but couldn't stay above it. So here we are once again, getting above the blue shaded area. So what we're going to look for here, and this is really what I will look for before I make the entry point into the New Zealand dollar. I will either look for a full body to get above the blue shaded area, or I'll look for a full body to get below the blue shaded area. One of those two actions will give me maybe a clearer picture of a real breakout rather than a false move above or below. If we get a full body above 66, we may be looking for further movement back up towards the orange shaded areas, and that's what I'll be looking for. And of course, if we get below 65.90, that would give us further expectation in a continuation of the downtrend. Until it gets above or below the blue zone, at this point, we could just continue to see it waffle around like it has been for the past couple of days here inside the 65.90, 66.10. You know, keep in mind, this is the blue shaded area, top to bottom of the blue zone is only 10 pips. We're not looking for significant movement. Your move from the 66 level to here is 20 pips underneath the 590 down to 65.70 is 20 pips. So we're not looking for extraordinary profit unless it's a more significant move than that. But if anything, we're just looking for a 15 to 20 pip intraday trade back to the orange zone or down to the green zone on a successful breakout of this blue zone for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.